been late day. Um, and you know, I thought the rug pull was quite perfect in a sense where um, I was actually looking at, I think it was like, look at the Z plays again, right? It basically stopped at the Z plays. So I hope that at least maybe not get into a trade, but at the very least kept you guys out of the long side of things. But yeah, so I guess we'll just see what happens. We're opening up in um 40 seconds. I don't see too much, to be quite honest. I do see a lot of rolling, but you know that doesn't matter for an intraday trader. 15 seconds. Like this. Decent volume. I'm gonna cancel my 45 trade just for now until we get up there. I have my flags on. I might just play a little bit. A little bit. Um, it's a fake Heimdall. Another fake. Right, I think you have to 45 almost. No, 41, 42, 3. All right, there we are into it. That's a real high. I'm just gonna wait until it tells me otherwise. I'm also waiting for the price action as well until it does something. I'm not taking it. Still nothing. That's fake high. Still nothing. Still fake high. A lot of selling pressure, not a lot of success in the sell side. Keep an eye out on Nvidia. Still nothing. A lot of buying, not a lot of movement right now. Bugger, right? For look for a quick sell at 74, maybe 73. We'll leave at 74. It tagged it, didn't get it. filled at 72. Not too hopeful for this, but I'll just kind of monitor it because if it doesn't go now, it could just trend up for quite some time. Risk mitigation at 447. But I'm just gonna keep an eye on it because it could go bad quick. Given the day type, what's happening, it could trend upwards. So if this doesn't pan out, I'll probably just say, for the most part, done for the not the day, but until for the next flow. Yep, I'm out. So I'm probably gonna be, just sit back, watch. I mean, this is gonna be, the way the action is happening. It almost looks like, let's just say for the Dow, right? Um, 1 second. Specifically for the Dow, we could easily just trend up to say, um, we can get up to like 676 and then crash afterwards. Crash back to at least retrace 50% of it, if not a little bit more. So, if it continues, I personally don't want to get involved in it unless you're going to jump on the long side, which you absolutely can. It's just not my forte. So I'm going to leave it be. Yes, NQ efficient, to the upside a little bit, sort of. It's a thick high in NQ for now. So it's just recognizing like the day type. It's just not a day that you want to, I took an L, don't want to keep on hammering, um, trying to make up for whatever it may be. This could easily trend up um, stronger than we think, specifically the Dow. Let's see. Yep. Dow's probably going to be a decent short at the end of the day. It's going to be an interesting buy right here in the NQ. A lot of buying in the ES. A lot of buying. Bond's sitting right at that major. See if it's rotating, trying to get up, trying to get down. See what it does from there. Neo highs for ES. Euro highs. NQ's upper bound is it's 03.5. Russell has a lot of selling pressure. Um, I will take one more setup on the Dow if it gives it to me, but as of now, I'm not taking anything. It might be a larger stop than what you guys are used to, but that's what it entails that it has to do, especially for anytime specifically you're trading the way I am, or much larger time frame, or with reassurance. Um, you mean more information, you're going to take a bigger stop. So just FYI. But I rather not catch this. I'd rather not, scuff up my hands. I'll just let it play out as is. And if it never gives it to me, it never gives it to me. Real high in NQ, imbalances for ES. So Dow's trying to give it to us right now, but we'll see. What I want to see right now is a top tick in the Dow. Should have named today's Z plays Like a Prayer by Madonna. This seems like it. Gotta pray for good setups. Anyone get anything good? Any good trades?
I'm just managing my swings.
Yeah, no.
I mean, by managing meaning looking at them.
Oh. Another imbalance in ES. That could be the last push, actually. Depending on what it does.
$700 market order right now. Did I see that right?
Say that one more time.
$700 market order. Buy.
Oh, I didn't see that. That's a real high in ES. Still pushing.
Damn it.
Unless you're long, hands off. What about it? A lot of volume coming through. What is the bonds doing? It's just sitting. NVIDIA's upper range is right here at 32. So it's matching it right now. I still don't have any kind of indication to get short yet. The fact that the bonds aren't moving is almost kind of giving me an inkling that we could possibly still collapse. But until it gives me everything I need, I'm not taking it. Ideally, again, I still wanted to top check right now. We're not too far from our down number that I want. So maybe this might be like a London close play. Russell really not liking that high of that day. Still in a balance to the high side, yes. See how NVIDIA accent its number. Let's see if this is a top tick in the Dow. Decent buying, trying to push, which is a good thing for us if you're looking for a short. All right, well, let's see what that does. Does it run? Nope. Top candidates to roll is probably Russell and Dow. ES has room to get up to like 46 to 50. Thank yous, that's major level right here, so that's going to be interesting. That's a real fine. Yes. Real fine NQ. On a selling in Dell, 0. Just got absorbed by buyers. At this point, you're not really looking for a top tick. You're really mainly looking for Dow to get to its major level. It's in levels chatter. NQ is hesitant to get above that or click it. All right, we just clicked it right now. See if Dow can get there at the same time. If they both reject, that's a good thing. That is a real buy by NQ. If ES and NQ are continuing this strength, we may not get a rogue one down. Next level up is an NQ. But
That's another percent. Wow. What would it, that would be +3, yes?
yeah, that would be. That's for NQ. Interesting. Seems like just a fucking worst fun scenario. I mean, the reverse of yesterday. Energy was up, everything was down. It was just like a reverse of it. All right. At this point, we're just playing the plus threes. All right. Well, Nvidia just busted through their shit, so Nvidia's just going. AMD's just going strong. Jesus. Okay. Well. Nothing to see. Nothing to see.
Remind me to buy 0 DTE calls every day.
Oh, what?
Remind me to buy zero calls every day.
Zero calls. Zero DTE.
Mm.
If you take that NQ major level, we should be able to test back the bigger one. If you don't understand what I'm saying, ask. If you do, we should. It's in level strata. Almost that major in the Dow. Gold's at a major. Russell's the weak one. Hmm. Gold might be a good long. Um, yeah, it might be a good long. Just double check some things real quick. Could be. I'll continue to monitor it. It's a lot of selling right now, so I'm still waiting for it. Nothing yet for gold. No, nothing in gold or anything else in my opinion.
If you look at Cree, it's doing well today. But if you look at the longer term view, it looks like it's very bearish.
Agreed. Yeah. That would be the
But I
line
think,
in the sand.
yeah, I think it still has to go a little bit higher before it turns back down, though, just from like looking at the 200 moving average on a daily chart. I figure it
Very
should
well
go up
could.
there.
Yeah.
Maybe it just has to go up there and test and then come back down. And then it'll line up with more seasonality because we should see bearishness coming into September. So this could be like another. And like honestly, like we were bearish coming into CPI and it was way too obvious, too short. It didn't seem right. So I think it's going to go back and forth a lot before it really pulls back. And then
Agree.
it'll be bullish after that. But and I don't think the CPI numbers matter anymore. Everybody, no, they don't because it's not like new news anymore. Do you know what I mean? Like unless there's a surprise, which people really aren't expecting, maybe there will be one because fuel costs really haven't trickled in. We'll see what PPI is tomorrow. But I think it's like bigger looming macro issues like the report from China that people really haven't priced into the market and like slowing down of GDP, which we won't see because it's so delayed. I think those are the things that are going to be the forces that need to get repriced into the market.
That I agree with. Congrats, John. What does that mean, Red Pie? I agree with you, Retro. No play-in gold. What is congrats?
I don't know.
Did he do well? Hopefully.
He's not even on voice.
Oh. Okay. Potential top tick right there in the Dow.
Oh, he called it long. Nice
Oh,
job.
nice. All right, I'm gonna try to look for a short at 641. $640 actually. So you can get that. It's crazy amount of buying in the Russell, obviously. Right? I don't know why it can't cancel. Good thing it canceled, supposedly, I think. They suck. I think there's more people who are intraday in yes text. That's why. Hold on, guys. Gotta restart. I'll be right back. I gotta restart. Sorry, I'm having some weird computer Ninja Trader fucking issues. God damn it. Um, Let me figure out what's wrong with this. But I did enter a short in Dell. That's 40, 41. Well, I got average price. I was aiming for 41. Average price is at 39. Risk mitigation just right now, actually, at 36.17. That's my personal account. And the Combine thing, I got it a little bit later. Risk mitigation at 08, if I can get it. So I'll be back. I'm just trying to figure out what's going on.
Yeah, check. Hello. Yeah. Yeah. Well, that's what you're gonna have to do, fucking Chia. Fuck's sakes. Or you're gonna be into this chasing shit for making up trades. Oh, there's a long. Yeah, right. Says who? No, I was already. I'm already looking for a short. I was already sure. Right here. Here, I can do it. Just see my little markings here. It was a 5-second line break. Yep. Oh yeah, price came running up. Well, I guess I can. Maybe let's just go out a little further. Once it did all this break around bullshit, it ran up really hard, right? Now, really, there's not much going on up here other than the price action itself, right? And that's what I was taking it on, was actually just straight price action. We ran up. Let's drop down a bit here. Like, I always watch NQ. It seems to be kind of aggressive, right? So it's like it potentially is gonna, if it's not going or whatever, it's not gonna really. So I just kind of watch it as it's coming up. We make a, we make a top tick, right? Then I'm like, I'm interested because we make that top tick. We do it as well in the ES, right? What we did do in the Russell was actually we came up, right? And I missed it just by a hair. I wanted it to get back to this level, which it doesn't have to. It was just right. And then, but this one here, this part here where it up ticked, came back, up ticked again. I didn't like that. That kind of threw me off of this whole thing. But there's the 5-second line break. The entry should have been anywhere along in here, and even if you had got that as an entry, you would have been perfectly fine, right? I like this setup way better than I like Zero's setup, where at least his was just a up tick, back to it. See the line break? Back to it, which is a little deep, and then we are off to the races, right? So it's just disappointing that I'm really close to getting this shit, and it's just not there. Now I feel like I should just chase NQ, try and snatch some fucking ticks, right? Which is stupid. That's part of the problem of most people, is they just chase price around, and they there's really no reason to it. Like Rai or whatever said he liked the ES setup better than the NQ setup, which really, what do you got? You got lower, maybe a little bit of a higher right here. That's the throw off, the throw you off. Lower, like right, you know what I mean? Where are you taking this? Right here? On the breakout? Maybe. It's the same idea. Where are you taking this? At least this gave you something where it showed a little bit of a turnaround, right? Like this maybe, but I mean, I doubt it. I wouldn't have even, these two were not even on the table. Yeah, look at, now you can just chase NQ and, make $200 if you really, you know. At the top, that's what my job is, Peter. That's what my job is now. That's yeah, you're right. Like that's chasing shit around. Just that's exactly it. You're gonna get burned. I don't trade the bottom very well, like the long side of anything. I just don't do it very well, right? So every time the chart gets to the top, I look for price action. Period. That's it. I was looking here every time we see these lines. That's me calling out or marking a top. All these lines. That's me looking for it. looking for it, right? Looking for it. Every time we get a pivot, I want to see that same kind of top tick and pull back, right? And I just wait for that when we get to the top of the chart. This was above. See how as soon as we got above that, what do you call it? The CPI number, right? Once we got above that, that's when I was really starting to pay attention to an upper part of the day, right? Upper part of the day. Well, if we were to actually all of like it's actually as it happens, right? So this would have been a higher day, right? But we're right on top of that major level, right? So I didn't like it because the way it was doing this. Same here. If we look over here, we actually bottom picked that major level just as this one, right? Reversed it. So this kind of actually this morning the major levels kind of threw me off a bit today, to be honest with you. Came back, see, and then it went and did it again, and I'm waiting for it right here. Waiting for it to tell me that it's wanting to reverse, right? And that's it right here. So no go for the Russell, right? And then we broke out of newer higher highs above, and that's when I really started paying attention right up here on this higher load or the higher like above the high of day or the CPI number or whatever you want to call it. That's when I started paying attention here. We also got all the way up to the YM level, the Dow Jones level, as high as, well, it was close, right? Wasn't great. Again, these major levels are a little bit trickier than, like, he's always saying, oh, the levels or level to level, but I mean, they're difficult to, you got to use a little more arts and crafts than just the levels, right? Because this level here just got eaten up all day. We came down and look at it. It reacted finally reacted and went up. Then we came down, look at reaction, back through. Now we fell right through, fell apart, right? Came up, this one here, same idea, came up, reaction, fell apart, came back, tested it, almost like, I'm not saying the levels are bullshit, they're just very tricky and nuanced to the price action that you got to follow. So came up to the major level, I'm looking for something. It pulls back. I'm looking again actually for seconds, right? Because we don't want to take the first shot ever. Then it came back, and then it held it. Then it ran up, then we broke the high a day or the high of the CPI or whatever that was. Then I was starting to look for it. That blue line, yeah, 54 is a major level. Yeah. 54. Yeah, 54 even. Double check that for you. Yeah, 54 even. Well, it's tricky too because zero always seems to. Yeah, he's making the levels like all the time. Then today, when he said, "Oh, we hit a major level," I was like, "What the fuck level is that?" And then, lo and behold, there it is. There at 48650 or 403 or something is what he had. What was that? 403.50. So again, I don't know what that level was doing, but there it is there. Well, and that's why I wrote him this morning. What the fuck time did I write it? Like at 9 o'clock in the morning. I said this was bullish flow, so flow was bullish to me, but the price was oddly reacting lower, right? So still, price is still reacting. The flow is still bullish. Yet we're going down, right? What's that? Yeah, the flow of the day was positive. Yeah, the flow of the, well, at least up until whenever, it felt like it was supposed to go up, right? Maybe that's not the best one. We'll go to this one. The flow was up, right? All the flow was kind of up, not just this price action going up, but the flow of all the where money was moving in and out of was positive, right? For the indices anyway, right? Look, we're dropping money out of the dollar. We're dropping money out of the. I like to use the yields, and we're dropping money from, you know what I mean. It's going into energy still. The bonds are kind of going. The money's going into bonds. The money's kind of going. You know, was going into gold, right? If you look, see how this is money's going in, right, to the other products. Oh, by the way, yields don't lie. Typically, they're going up. It's usually inverse. Same with gold. Now it's just in the middle of whatever, and I'm probably, well, we got 11:30 coming up, but I mean at that point we're still in the middle of something. So until we come up and potentially, you know, if we come up and crack or try and get into this major level again, that's the only place I would think about going short again. Well, I actually initially I kind of had that thought. Um, okay, initially I kind of had that thought at the CPI number when it wicked up and grabbed all that and just it, you know what I mean? See how it broke that level? And I was like, I was thinking that that was the end of the action. But that was enough for them to make that wick, right? That was enough to them for them to pull back, and then the chart would look fine at the end of the day, but you would never know that this price action kind of was so fast. You know, a lot of people that look just like say the daily time frame, they don't see how that threw a wick up there, but this wick was within fucking 15 seconds and it was over, right? Like it wasn't like it ran up there kind of like, you know, like any of these other tops. It just the CPI number just ran up quick. This structure here. If we were to use the break of structure method, this is a pullback to go long. Well, that's the thing. I always said that it can always go deeper and further than you think, or than you want it to, if you say it like that. Oh yeah, could this thing break down below all this, all the way down into wherever it wants? Really? Yeah, absolutely. And that's gonna be, and then tomorrow's PPI. So you got that going on as well. I don't know. I'm kind of a little bit frustrated today now. Happens every day. I try and wake up early. It doesn't seem to work out for me when I wake up early. I, oh. I when I wake up early, I don't know. It just seems like I groggy by the time the action take action. Groggy, but I don't know. I don't know. I gotta work on some stuff, I guess. New trade? Is that what you said? Yeah, no, it's it again. Oh, um, overall, and then I don't know. My focus window isn't that good because if I wake up at like say, well, like I wake up early, like 5:30 in the morning, and start looking at the charts, and then doesn't I don't know doesn't seem to help about that. I don't seem to get any edge from waking up early. Now today was an 8 o'clock. You know what I mean? You had to be up at least at about 8 o'clock to even see what happened. But then again, look at it, rip, rip, rap, rip. And then I was down, like I even wrote it in the chat there. I was down on a 1 second chart. 1 second chart. That was at 8:30, so 6 minutes after the news. Still moving way too fast. I think now I've got to wait until probably sort of the clock or whatever before I even get a read again back on this, right? Or at least then, by then, we got to get back up to the top of the chart, right? I won't be able to take a trade. I've been practicing on the long side. Doesn't work though very well for me. So again, I'm going to wait for the top of the chart again. And then that will be out. Well, exactly. Let's back to the relationship kind of, right? I don't know. Even I'm trying to treat the combine as if it was real, right? So when I was looking at the Russell, it was well within my rights, and I was only, I think it was only, like, well, like $200, $250 off of risk there, right? Or potential. Well, basically, it's a grand slam, right? It's the daily max on Russell. So if you could imagine daily max on Russell, the actual, if we were to get it, well, let's just say we were to get it here, and you went underwater a couple times. This was a $4,800 trade so far, right? For, oh, I shouldn't have clicked that button. Sorry. You know, for $1,000 drawdown with the NQ, that's a pretty difficult. So that's still 4-1. That's a pretty big pill to swallow on. That's why I chose the Russell. I started focusing more on Russell and focusing more on Dow. Originally, the whole thing started with me recognizing the fact that like this is when I got started talking about the Dow. Look at their CPI number. They buried it way before everybody else. See what I mean? Like they beat it and broke it. So right now we're at the high of the chart. So I'm looking at the high of the chart on every one of these moves going up to try and find the price action that matches. Now it just so happens that Russell got up and broke its CPI number as well, right up there as well. So then I switched over to Russell because the price action seemed a little cleaner. Like, see how it ran up, pulled back, right? Now we're breaking down for more. I prefer this. Yeah, I really don't like this consolidation here because it's matching up with all the rest of the consolidation. Right? Everybody else's consolidation. See how everybody's consolidating here? We got ES, we ran up, ES consolidates, ran up, NQ consolidates, right? Ran up, right? But look, then Russell actually pushed ahead, then it broke its PI number during this action here. During all that consolidation, Russell was just running out of control almost. It broke the CPI number, it pulled back, and we're into the thing. So I can't be that disappointed. It was a tricky play. I think Zero just, and that's again the relationship with money. I think Zero's just got enough bankroll that he doesn't really think too much about it. It's more like a game now to him, where losing $400 every once in a while or whatever is okay. It's not a big deal. Yeah, like I believe that. Why do you think he's not doing very well in the combine versus his real account? Right? It's that relationship with money again. When you start from the bottom, it's really hard to claw yourself up and out of the hole, or maybe not out of the hole, but like to get up on top of the hill. And then from on top of the hill, then you can kind of, take a little, like it takes the mind out of it more. That's the relationship with money, right? If you can get above it, worry about it as much and just kind of start placing trades. Like I've been placing some sim trades lately. Yeah, I'm letting them go a little bit wild. But I mean, where you can just, if you just go with the flow and not really, care about it, you can actually perform pretty well if you've been doing it long enough. You can kind of smell like this is just like, it looks like this could be a bottom here, right? Like, look at, see, we even got the price action in the Russell kind of telling us that we have a reverse bottom here happening, right? So you could go long ES here. I wouldn't, but I mean, you that could be a setup right there, right? Which is not the greatest, but it's all balanced off of this Russell. And the way it's drifting down, it's not really ripping down, right? This could be, you know what I mean? It's not like yesterday. Yeah, it was just kind of slowly dripping down. It's not like yesterday's move where it was more of a, where's yesterday's move? Yesterday's move, see how it fell, consolidated, and then just fell again, right? Same thing here. Fell, came back. I tried to catch that long there yesterday. In the I picked down, I think yesterday, to try and grab this long, which I knew exactly what it was. It was just a pullback for more short. I should have just been more patient. But at the same token, you would have had to have, the risk would have had to been, like $500-$600, whereas this risk would have been more like $200-$300, right? To get that long in. And it was getting near the end of the day, and I was just kind of trying to put some sort of fucking profit or some bullshit in the tank there, which is kind of a bad, not a great attitude, right? Like it's, but I mean, if you don't, there's that long, right? If you don't really, look at that, beautiful, right? And then this should pull back, right? 277 or give her whatever, I don't know, maybe even a bit ahead of that, maybe like 279 ES or NQ. Not have extended far enough from this either. 510. Yeah, 10s, maybe a little bit above that, maybe 11. Because it's going to be shallow, right? Because if it pushes too far down, it's going to break it, and then the whole thing's going to collapse, right? Like that's what I mean. It's got to be shallow here for this to return back up, right? You know what I mean? If it goes too deep here, they're just going to carry on. And that might have been enough right there. See that shallowness? That was it. That was as much of a pullback as you want. After a downstroke, the pullback can be shallower than you expect, right? If we were to come up and do something different, then the pullback will be a little more, right? Like, see, now I'm a little more leery of this pullback because we should have carried on further, faster, and then pulled back and then gone, right? So this pullback, I don't know if I would take this long. Now, you could have cowboy jumped it way down here, like I was saying, but again, why? Every time I look at a trade now, I go, why? Why are you doing this? Why are you doing this? Absolutely. Absolutely. That's why I'm not good at longs. Because if you look at the risk here, let's just say we were to get back into here, you have 14 ticks of risk, right? On the ES. Well, 14 ticks used to be my norm, right? So if we look at NQ, yeah, that's $700 worth of risk. That's way too deep, right? That's the problem with the bottom, is what I have, right? The shallow, the pullbacks seem to be shallower, and the price action where it actually rotates is too far away from risk. Whereas if we were to look at the top, how tight risk is? Risk is always seems to be tighter at the top for some reason for me. Or risk at the bottom, see the bottom? See how risk is always deeper than you want it to be. For me, I want it to be. That's why I'm just going to focus on shorts, period. Not even going to fucking bother. I know I'm losing half the game, but until I can get my relationship with money in control, then I'd rather just take my 65% win rate and keep it. I'll keep my 65% win rate. This is actually pretty shitty. If you actually look at this, average losing trade is bigger than my average winning trade. I still have 65% win rate. That in your scratch that into your noodle. Fuck. Well, not really. The win rate should be, I don't know, whatever. This is actually should be a losing win rate. Yeah, I know, but if you look at the numbers, this should actually be a losing rate. It means I'm putting the money. I used to call it putting money in the jar, which again, yeah, exactly. But I'm winning 65% of the time, so it balances all that off, and 15%. Well, I have. It's called profitable. It's called profitable at that point. Yeah, but it's there. It's slow. That's the issue. It's slow. Like yesterday, I made $20, and yesterday, well, yeah, precisely. But yesterday, oh, it's still the same. There, okay, so the day before that, we had a 63% win rate. We roll back up here. 62% win rate. 60% win rate. 57% win rate. 61% win rate. See how, and then it goes back and forth, back and forth. 64%, 61%, 58%, 54%, 57. No, it's the management. It's my management style, which I'm not gonna. It's against Zero's teachings, so it's just the management style. He does what do you call it, a risk mitigation. I do a profit mitigation instead, so it's just slightly different. And like you just said, making $20 is better than losing 70 or 700 or 900. This is gonna fuck around. There's the close there, eh? Of Europe close. And then close. So it didn't come back up to the major level, which I would have preferred to see it come all the way up to the major level. Wasn't gonna do that here. It's Asia high as a pivot. And same thing, Asia high for a pivot. So London ran it sideways. CPI pushed it up. Numbers were actually bad, but like Retro was saying, the numbers they weren't like completely out of line, so it's not like they were a surprise. So bad numbers, good numbers, nothing really, because it's in line with what they. It's not out of whack, and when it's out of whack, that's when you're going to get a weird reaction. But pushed up, for what reason we're not sure. Maybe we don't know, right? And then they obviously they sold it off. And Google's kind of pushing. Everybody's pushing up. So this will be a no-go for me, probably for this London close, really. You could try and go long here, but where's your risk? Way down here? See what I mean? Same thing. Same thing we were just talking about, right? The risk is too high. So then if you want to go short, where's short risk? Right here? You're not really wrong there. Right? What, this pivot group? You're going to call it wrong there? That's just a waste of money. Let's just say we're short here. This is NQ too. Yeah, $600 on 2 contracts, right? Which is what I'm using. So, you know what I mean? And then what? You're just going to throw away $600 because this is probably going to squash that and come all the way up to wherever, right? Look at, here's that major level now. Still a pullback long, right? Russell hasn't done it yet. Or is it the, and let's see, there you go. And you go too far out, the line break becomes a little blurry. Look at this one, 5 minute, it's just the pullback to go short. And see how you can go back and forth with this fucking thing? There's just the pullback to go short. And I know you got a long one. This pullback should be way up here. That line break could work to go long to get there. Yeah, you could go long to get there. Oh, yeah, absolutely. You could, so it pulls back, go long, and then short from here. Yeah, sure. No, absolutely. You can hit your daily max 5 times over in a day. No fucking problem. That's the, who's in here right now? Okay. That's what I was trying to say to I was like, I'm kind of, not to be like that, but I'm a little disappointed in Fat Cat's performance in the sense that there's fucking so much money there that he can only scrounge, like, say, $2,000 out of it, catching 9 ticks. I know it sounds a little funny, but if you were to shoot for bigger moves, he could be doing really well, like extremely well. Like you're talking like Lambo well, right? Like,
Yeah, but he's like super leveraged though. Like you see the amount of lots he trades, right? So that's probably why he doesn't want to hold on, for bigger moves. And like I think that's the problem with his trading style because he doesn't risk mitigate, right? If you risk mitigate, you're more willing to let it ride. Whereas, he's like in out, in out, in out, that kind of thing.
yeah, no, I get you.
I mean, yeah, he does scale up, but I mean, he doesn't like risk mitigate at 1-to-1 where you can just leave it and have like peace of mind.
Not worry about it. No, he does a like a risk protection type of system. Yeah.
Well, that says like
Runs
hard
with
stop,
it.
right?
Yeah, well, if it runs with him, he allows it, and if it doesn't, he cuts it fast. And yeah, I
Mhm.
get it, but like, if you, I don't know, I just don't. The way I'm seeing it, I see like if even if he was just trying to grab this little chunk right here, this is a 1 minute chart, and if he was just trying to grab that one chunk right there, which is whatever, that's 200 ticks on the NQ on 12 lots. That's okay. So let's just say we're doing ES, and he got 40 ticks on 12 lots. Isn't that a whole bunch of money? Why is he? I don't know. Yeah, but he shoot. If you ever notice, if you wonder why he gets those MFE, MAEs or whatever, it's because he is hitting right in here, and he is, but he cuts it at 9 ticks. I don't know. I'm Yeah. No, I'm not saying it is easy. I'm not saying that at all. I'm just kind of surprised that he's. I don't know. Sometimes I see it and I'm like, 9 ticks, 9 fucking ticks. Like that's. I get it that it was worth $1,200 because he was running 12 fucking lots. But 9 ticks. I don't know. I don't know. Maybe that's what Cosmo kept kind of saying something like that. It was along those lines where he would oops, sorry. Oops, I shut that off. He was saying something along those lines. If you can make the 5 ticks, 9 ticks predictably, you just need to size up on it. Okay? Yeah. I don't know. I guess what I was saying to Zero was that if he were to incorporate a little bit of Zero's methods, he would be like lights out fucking like you ever like he would making a lot of money. He would make a lot of money. Well, I tried to tell him about the correlations, right? I just didn't think he was going to tell the world about it. Fuck. Well, yeah. I just didn't think he was going to tell the whole fucking planet about it on YouTube. I really didn't. I don't know.
Don't
Yeah, well, yeah, the relationship with money, I think it stems from the fact that money traditionally has been taught as hard to make. It's not an easy thing to make money. So let's just say we get a job, minimum wage, whatever. Let's just say you're making more than minimum wage, doesn't matter. It's hard to make it. Then when it comes to trading, giving it back, even though the opportunity to have more, you tend to still have the fear of giving it back because in your mind you think that it's hard to make. Now, saying that it's hard to make, that's the second, like, if you ever look at it and you wonder why, like, okay, so I have some businesses and a lot of the workers were always like, oh, you make too much money, like you make too much or whatever. And I'm like, yeah, but I do everything. All you guys do is come here at fucking 8 in the morning and leave at 5. You have no other fucking nothing to worry about other than that. And that I'm gonna pay you. And I do. And if they never want to take the risks, that they want all the rewards. Right? So, same thing with starting a business. Is that everybody wants this, oh well, it looks easy and this guy can fucking do it, so why I can do it, that's no big deal. Yet they don't, and they can't. Because again, they can't let go of their relationship with money long enough to be able to support the fact. Like the one guy couldn't, he was like, oh, this is gonna be no problem. He was having a hard time keeping 5K in his account. I said, dude, you can't even fucking start this fucking business without the working capital of 50K. You need 50K and you have to be able to survive 6 months paying everybody's salary, paying out all the materials, paying out all my government fees, everything, the fucking website, the accountant, the fucking bookkeeper, everything has to be paid for 6 months minimum. And if you think 5K is gonna fucking do that, you're dead fucking wrong. And he was like, oh, I'll show you. And I'm like, yeah, you show me when you go and find another employer fucking 3, 4, 5 weeks from now after this one job that you landed on, we call it Kijiji. I don't know if you guys have Kijiji down there. It's like a buy and sell fucking thing. Because you hustled a fucking stupid fucking job off of Kijiji. We'll see where's your next job. What's the next? Like I'm already 5 jobs ahead of you in my mind. I have to be. There's no way around it. Now there's droughts. I mean, you have to have the mindset of none of that matters, right? And then that's the thing with the trading, and it's really difficult to let go. And that's what I was saying, the relationship with money. I have money, but it's my hard-earned money. right? And if I can bankroll enough of, I hate calling it this, but the house money, if you can bankroll enough house money, then you can let go. If you can let go without that, then go ahead and let go. That would be great. That is my struggle, is letting go of my hard-earned money that took 3/4 of my life to fucking build. Now, you know, I could drop 100K into an account and go, okay, now we're trading. No, that's still not going to work because my hard-earned money is going to be dwindled away fucking like $200 a go by not taking proper quantitative like risk, I suppose. Like, you know what I mean? Like being like, okay, let it go. Like take the $300 and then if you lose, you lose. That's fine. Especially if you can get to a point where you feel like your trading was, you know, productive. Which I believe it is. Well, I'm 65% of the time, right? It's not. These stats aren't good. I'm looking at these and they're not good. That's crazy too. There's a daily max there on a chase on NQ. Like fuck. It's just I fucking can't chase, man, because I've been burned so many times that I can't chase, and it's like it's still it's just bad to do it. It's 2200 on that chase NQ I put on paper. Yeah, you see what I mean? Let me look at that entry. Where was that entry? Around? Jesus Christ, man. That's 235 ticks right now. Pull back to go long? Might be a little bit too far off now. Go look further out. It might be, well, you never know. Because look at it is such in the middle of the thing. It's in the middle here. And we need to wait for it to get all the way down. Yes, 84. No, NQ 170. Dow Jones has got to get down. Jesus Christ, it's got to get way down, like 200, 35, 200. Russell is almost there right now, but I mean, without all of them lining up, hard pressed for the thing to do a full reversal. And if you notice, if you look at all the major reversals, every product did it. They all did it a little differently. If you look, they all did it. If you find one that's at a position, then they probably won't do it, right? Like, you know what I mean? It needs more time. Somebody needs more time. Somebody needs more space. Somebody needs something, right? Before then they can all kind of get together and then go. That's 270. That's 280 ticks. Fucking bloody chase. That entry was 281.50. That chase breakdown. That was a breakdown chase. Which, you know what I mean? I was underwater. Let me measure. Well, this is going to be hard to measure because it was so small now. Yeah, maybe 200 ticks at the very outside. Or, sorry, $200. 20 ticks. NQ. Frustrating when this is what I'm trying to say about how much money there is on the table here. And a professional like Fat Cat can only still make X amount. Kind of like, I don't know what to say about that. It's of no, I agree. I'm not saying that. I mean, it's the 9 ticks. It's the 9 ticks, Peter, that really kind of he should have this today should have been a home fucking run for like 15K. Easy. The other day he made like 12 grand. You should have seen where he caught the move. It was like I was looking at him like, holy fuck, he was so far off of where zero wants to enter. It's like mind-blowingly so far off, and yet he still made 12 fucking grand. That's what I'm saying. He's so far off of zero's entries, he still makes 12 grand. That's that. I don't know. Maybe I'm just frustrated, but I just like he could have made probably about 38 grand that day if he had it just did the smallest amount of what zero could show him. Right? I don't know. He's pretty stubborn, that's for sure. Doesn't he's pretty stubborn, that's for sure. Like somebody was trying to say something like, oh, maybe there's them. Obviously, they're younger. Peter, how old are you, Peter? Yeah, exactly. And Chia, you're a bit younger, right? You're probably like, what are you, 30 or something like that? By the way, once you get a little bit older, it starts to become a little bit, everything kind of gets a little clearer kind of thing, right? Chia, you're young. It's 26. You don't sound like it, though. You're pretty mature. That's pretty good. But somebody was saying something like, "Oh, well, does trading make a fulfilling life, or like, what do you actually um give to the world, or whatever?" Trust me, get the fuck over that pretty fucking quick after you've been burned by the world 100 times. The world does nothing but shit on you constantly from birth, basically. They get over that. Whoever was saying that comment, "Oh, what do you give back to the world?" obviously haven't lived long enough in the world to understand that I don't give a fuck about the rest of the world anymore, and they don't give a fuck about me. Take your money from whatever you do, just take it, right? Like don't fucking worry about how the world thinks that, or like what do you give back to society. I really give a fuck. I don't give a fuck about what I give back to society. It's the fucking Elon Musk is doing enough for all of us. How about that? Fuck it. I don't give a fuck. And you know what? And if I make enough money, I'm going to pay the Lambo factory worker salary. You get what I mean? I'm going to buy lobster dinners and tip that fucking waiter. I'm going to buy, like our houses. The realtor gets paid. Taxman gets paid. Everybody gets paid. So don't worry about fucking giving back to society. It's like this should be the least of your fucking worries, man. Giving back right there. That's enough. That's what I mean. You don't have to have like this. I'm a fucking cancer doctor and I've saved fucking. Do you really? Okay. You know how when you go to war and they took like a body count and they'd be like, yeah, you get tattoos. You say like I've had 20 kills, 50 kills, 100 kills. Do you think the doctor has like a tattoo list of how many people he's saved? I think he's like, oh yeah, honey. He comes home. He goes, that's 1,322 I've saved. Look at me. No, he doesn't. just there to do a job, basically, and looking for praise. I don't know. Maybe I'm ranting about nothing, but it's being jaded is actually how you're going to succeed. That's what I'm trying. I guess maybe that's what I'm getting at. You don't have to give back to the society. Don't take like a fucking dirty pig, cuts everybody off in line and shit, or traffic or whatever. But just being courteous to normal people, that's enough right there. Right? Get this bag. That means. We don't even want to be honest, I don't even want to make a fuckload of money. I just want to make a salary. Don't work as hard. With you. I really, like making a fuck ton would be great. I already did make a fuck ton, and I already do. Like, making money isn't a challenging part of this world. It's actually releasing your mind and allowing yourself to make money. The trick to it is living a life that's not. It's whatever your life whatever you want for life, right? Really. Giving back, that's what I mean. Fulfilling giving back could be just having a family and providing for them. It could be just as simple as like a lot of these top end basketball players or football guys, all they ever wanted to do was give their mama a house. They just bought the house and they sold it, and then they got their parents a house, right? Or bought them a new car or whatever. Or the greed will come in. As soon as you make a fuck ton of money, all of a sudden you're gonna have it's like winning the lottery. You're gonna have all these new fucking friends that all of a sudden, hey man, you remember me? Hey, what's going on? Loan me $50? That's what it's gonna be. Well, that's the thing. You can't make $1 million, and that's the problem, right? People want to be both. They want the fruit at both ends of the branch or whatever, and typically you can't really be that happy if you're burning the candle at both ends and you are the boss and you're worried about everything. How can you know what I mean? It doesn't work like that. It's hard. It's hard. I've always I've always been good. Uh, I've always been good at not doing that kind of thing. Like, it doesn't really make me happy. Um, if you, yeah. Don't get me wrong. That's true, and like, that's true. Don't get me wrong. Didn't not like what I used to do. What I might have to go back to doing. It's the fact that I'm getting old, right? I'm getting older, and I work construction. And you can't do that for your entire life, and then people do everything. I'm a general Yeah, I'm a general contractor, right? So both, everything, all of it, right? I've made a lot of money. Made a lot of money, and the problem is that I'm getting old, and I'm getting kind of tired, getting sore, right? Like, and a lot of people are like, well, why don't you just work less and have the people do more of the work? I said, because they don't do the work. Right? Like, and they don't do it on schedule, and they don't do it on time, or they want to get paid too much, or they don't want to. It's like the hassle of them is really why I don't want to do it anymore. Because like I said, if you don't do it yourself, nobody's gonna fucking do it, really. Or you're gonna lose all your profits, and then it's just a waste of fucking time. You know what I mean? Yeah, I can get a bunch of subcontractors to do my roofs. Guess what? I probably won't make anything. Actually, I'll make fucking zero. Because they're charging out the exact price that is the going rate. You know what I mean? Like, that's the going rate. So how do you charge the customer more than the going rate? You can't. You just can't. There's no profit there. What I used to do was we would take care of all or almost all aspects of the job or jobs with in-house employees. That's how we maximize profits. That was coupled with my knowledge of construction, right? I can do. There's not one piece of construction that I don't know how to do. If there is a piece of construction that I don't know how to do, I'll come back to you tomorrow morning and I'll tell you how I do it. That's how I do it. Roofing or shingle? So like that's what I mean. Like I was gonna go like it's not beyond me to go. Let's just say we landed a job doing standing steel. Then if you know how standing steel works, there's a thing that bends over the thing. That tool costs $600. Wouldn't be beyond me to pay the $600 for that one job to get that done. Because we would make a hell of a lot more than $600 on profit on that job. Yeah, to flap that piece over, there was like an automatic bending, almost like a grinder, not a grinder, it's just it folds it over, and it just pinches it, and you run that up the seam after you've laid all the panels in place. Run that up the seam. That's what locks it all in. It's done. Yeah, well, that just laps it over and makes that standing seam, and then you just fold that piece over. That's what makes it watertight. That's it. That tool is a specialty tool. It is super expensive. It wouldn't be beyond me to fucking buy it. That's the other thing too. People would be like, "Oh, well, I can't do that job. I don't have that tool." No, I buy that tool. Here, I have a chainsaw, concrete. We used to do a lot of egress windows and core slab cutouts and walkout basements, kind of shit. I have a chainsaw to cut concrete. I didn't customize it. I bought it. It's called a Rock Boss. If you want to look it up. It's like $4 fucking grand. I care. At first, I kind of did because that was pretty big, but after the third job and it paid itself off, I was like, oh fuck, it's all just money. I don't know where I'm going with all that, but it's not trading, that's for sure. Yeah. This is still, this is probably, I think this is still going down. It's almost reverse ducks here, but I mean, I still believe it would go down. Depends if NQ breaks here, but I mean, yes, or sorry, Russell and Dow are kind of, time is wrong, right? Like 12 o'clock in the afternoon here, it's not good for me. I try to not trade between like noon and it actually ends up being like 12:30 and 2, 12:30 and 2, 2:30, give or take. I try not to trade. There's that ES breakdown. So we should get a little pullback and then we should continue flushing down. Now, I can't take this trade though. Far in the bottom. Let's do shorting too far in the hole. Right, exactly. What I mean, so if you were to just think about the, like, I don't know, I'm not going to do it, but no, I wouldn't say that. I would almost go with the one that's aggressive now. So I would actually be looking at the Dow for a pullback because NQ still got to go down. So Dow or Dow, Russell, all of them have to go up a bit and then pull back as NQ comes down to make that break. Break is going to be way low here at 216, right? You could short that, but I mean, you got to be careful because as soon as you short it, it's going to do the line break and pull back, right? You see what I mean? You got to be careful with that. See right there. I think that might be partly what Bayman's problem is. That he's not kind of setting it and forgetting it. And he's not being as reactive as he potentially could be. Like, I don't know. I know there's a let it in it run and all that, but there's also giving back. I don't like giving back. Especially if it's already gone with you. line breaks or anything. See, shit. That's what I was saying about that short on the NQ. Everything was fine. It's just you had to wait for it. If you could have waited for it at the top here, I mean, still without the line breaks, you're really kind of guessing on nothing. So you could have taken. Let's see how the other three. Those pullbacks were solid. Those were all perfect. So even like let's just measure the ES. I don't know. I'm not really great at grabbing the top, so I'm gonna measure it from like say 99.50. So that's 13 ticks, 14 ticks from there. So you could have easily, well, what would the risk mitigation at 99995? Risk mitigation would have been an 8. So you would have risk mitigated if that's your style. Or yes. Well, I wouldn't have taken the NQ because of the no line break, structure break, right? So you really don't know. If anything, what NQ is about to tell us is that the structure break was no good. And if the NQ had broken above 47 or whatever that pivot is right there, if it had broken above that, that would have fucked all the rest of them up. Right? And then that line break or that structure that broke was really, that just kind of tells you that the structure is not that important. Right? Oh, absolutely. When somebody said, "Oh, if you were to watch one, which one would you watch?" I'm like, you can't just watch one. That's the whole thing. There is no one watching. You're watching the whole thing, or you're not watching the whole thing. It's which one would I watch? I'd watch them all, right? There isn't one that's better or worse than. That'd be like, which sector do you watch? I don't watch just one sector because all kind of. If there was one sector to watch, I would say it's the financial sector. I mean, like you could say that a lot of people or a lot of bigger people are using industrials as their backdrop. Okay? So some of them could say not financials. Say, let's watch the industrials. Sure, that goes with seasonality as well. Because right now industrials are good. Why? Because everything else is doing bad. Right? You know what I mean? It's like, well, tech's doing good. That's because everything else is doing bad. Right? When one is shining, it dims the others. Now, it doesn't mean that they're going down. It just doesn't make them as bright. Right? You gotta think that the most popular sector should have the most activity in it. Saying that, it would be the highest of volumes. Saying that, what happens with highest volumes? It drops off the fastest. It changes. Volume changes when it drops over the fastest. The peak, like when it falls off, right? Here, I might have to let you go though, Peter, because I'm gonna have lunchtime with the kids here. I'll try and give you a heads up later on, like around 2 or something like that. Oh, 0. Okay, I'll talk to you in a bit.
Inc. presents The Daily Trading Coach. I asked myself, why am I nervous? I couldn't find anything wrong with losing trades than winners. The steady drumbeat of losing trades was eroding his self-confidence. So what was the problem? Our trader was waiting for markets to begin moving in the anticipated direction and then entering with full size. By the time he lifted an offer or hit a bid, the market had already made a short-term move and was ripe for profit-taking by scalpers. His full size made these counter-trend moves intolerable, and his risk management rules ensured that he had no staying power with his ideas. The market was controlling him. He was not in control of his trading. The loss of self-confidence was inevitable. The key to regaining self-confidence in such a situation is to turn the focus from making or losing money to the actual process of trading. We initiated a simple unit sizing rule in which the trader could only enter positions with 1 unit. His maximum size was 3 units. If the position went his way, but then experienced a normal retracement, he added a second unit. If the position did not go his way, he maintained a defined stop-loss point and ensured a minimal loss, given that his size was 1/3 his maximum. The trader could not control the market's movement, but he could control his position sizing. This process focus promoted a sense of self-efficacy, which was essential to recapturing his confidence. You control how you trade. The market controls how and when you'll get paid. This is one reason that trading with rules is so important. You can't control your P&L statement, but you can control whether you adhere to trading rules. Your focus becomes one of trading well, not one of making money. Every rule followed, every market traded well, is a success experience in the process sense. Over time, profits result, as long as the rules are sound, but the confidence comes from self-mastery. Another powerful source of self-efficacy is preparation. When you prepare your trading ideas for the day or week, you generate a sense of mental mastery. This is particularly the case when your preparation includes what-if scenarios that guide your decision-making under a variety of market possibilities. Successful experience is a powerful source of mastery, and the mental rehearsal of trading plans under various contingencies generates a form of experience. As a psychologist, I am impressed by the degree to which traders who prepare rigorously feel as though they deserve to win. That same sense is missing among those who casually scan newspapers, charts, or websites and then plunk themselves down at the trade station to place their orders. Many traders confuse self-confidence and positive thinking. Self-confidence is not expecting the best. It's knowing, deep inside, that you can handle the worst. The self-confident trader can look a stop-loss level in the eye and know that he will be okay if it is triggered. The self-confident trader knows that loss is part of the game, and that some of our best market information comes from good trade ideas that don't work out. Self-confidence is not cockiness, nor is it viewing the world through rose-colored glasses. It's the quiet sense of, I've been here. I can handle this. Confidence doesn't come from being right all the time. It comes from surviving the many occasions of being wrong. Nothing is so important in building self-confidence as successful experience in the face of adversity. When you serve as your own trading coach, a major task you face is generating your own positive trading experience. Just this morning, I read an email from a trader who had experienced harrowing losses in the markets over the past 2 years. Now he was having difficulty sustaining the optimism needed to weather normal losses. His failure was not as a trader, but as his own trading coach. When we traumatize ourselves, we generate negative experience. We create a sense of helplessness rather than mastery. We create deep emotional connections between trading and loss, rather than between trading and self-efficacy. We undercut self-confidence. A great way to build self-confidence is to focus on how you trade when you're in the hole. If confidence comes from successfully navigating adversity, you can build your confidence by working on how you trade when trades go against you. The idea is to focus on trading well by giving yourself a chance to dig out of the hole by not exiting a losing trade prematurely, but also to not allow the losing trade to move so far against you that it creates trauma. Every planned loss that you take provides you with an experience of control. Every drawdown that you battle back from is an experience of mastery. When you come back from losses, you reinforce your emotional resilience. You can't control whether you win or lose on a particular trade, but you can control how much you lose and how you lose it. Every trader needs a plan for losing. Your stop loss is your plan for a losing trade. Cut your size after a series of losing days and focus your efforts on your highest probability trades as your plan for a drawdown period. In Ranger School, the Army exposes recruits to the most harrowing physical conditions possible. Once recruits have completed their training, they have the deep conviction that they can handle any and all battle conditions. You want to view your losing trades and your losing periods in markets as your Ranger School, your trial by fire. Your losing trades and losing periods are your trials by fire that build resilience and confidence. How will you handle a significant losing trade? How will you handle a significant losing day? Week? Month? How will you ensure that you can draw upon your strengths and come back from these losses and build your resilience? Your assignment is to develop your plans for losing, to always know and mentally rehearse what will get you out of trades and out of markets so that you can retool your efforts. In psychology, crisis does offer opportunity. It shakes up our assumptions and forces us to make changes in how we think and act. Your challenge as your own coach is to find the opportunity in your crises by generating and rehearsing plans for anything and everything that can go wrong. To prepare for hurricanes and tornadoes, communities not only draw up disaster plans, but also conduct drills to put these into practice. Change is a function of preparation and training, drilling the right responses so that they are second nature when market disaster looms. Coaching cue. Just before I wrote this section of the book, a savvy trader contacted me and explained that he broke some of his rules and lost the profits from the prior week. He was very upset and wrote a memo to himself to ensure that he learned from the experience. He sent the memo to me and insisted that we talk in a few days to ensure that he followed up on the memo. It's a great example of how a trader takes a losing situation and turns it into an opportunity for self-improvement. He won't let the issue go until he's rectified his errors. That's how traders turn losing experiences into confidence builders. Next time you blow up in your trading, write yourself a detailed memo that explains what went wrong, why it went wrong, and what you will do to avoid the problem going forward. Then send the memo to a valued trading buddy for follow-up to hold yourself accountable. That way, every big mistake becomes a catalyst for meaningful change. Lesson 10. 5 Best Practices for Effecting and Sustaining Change. The first 2 years of my career as a psychologist, I worked in a community mental health center, helping individuals, couples, and families with the full array of emotional disorders, from depression to drug abuse. The following year, I shifted my practice to student counseling at Cornell University, which afforded my first opportunity to work with a relatively healthy population dealing with normal developmental issues. I then took the community and student experiences to Upstate Medical University in Syracuse, New York, where I coordinated the counseling and therapy for medical, nursing, and other health sciences students and professionals for 19 years. It was in this latter setting that I learned to apply brief therapy methods to the challenges of young people who were in high-stress, high-achievement occupations. That experience would prove invaluable to my work with traders in the financial markets. During my time in Syracuse, I met on average about 150 students a year for about 8 sessions each. Multiply that times 19, and you have a sense for the changes I've seen happen and not happen. The shining successes, the disappointing failures, all stand out in my mind as if they occurred last week. When you've worked with that many people over the course of a career, you develop a good sense for change processes and what makes them click or stall. It doesn't matter if you're working with a victim of abuse in the community, a student with test anxiety in an Ivy League school, or a medical student dealing with the first loss of a patient. Change has a particular structure and sequence. There are factors that speed it up and those that impede it. Below, I share 5 of the most important change elements that affect my work as a trading coach. When you harness those elements, you will be well positioned to succeed in your self-coaching. 1. Timing and readiness. Timing is everything, in psychology as in trading. The research of Prochaska and DiClemente suggests that people are most likely to make changes when they're ready to make changes. Many times we're conflicted about change. We're not really sure that we want to abandon old ways. I talked with a trader recently who lost much more money than he should have and than his plan called for because he simultaneously traded 3 positions with full size when those positions were highly correlated. He was wrong and he blew out. But when we reviewed the unit sizing by trade idea rather than simply by position, it was clear that he wasn't sure he wanted to make smaller bets. He was upset because he was wrong on the idea, not because he had violated risk management discipline. My job was then to help him become more ready for the change he needed to make, just as an alcohol counselor must help an alcoholic become more ready to commit to sobriety. You will change when you're ready to change, and you'll be ready to change when you recognize that you need to change. As we saw earlier, by